Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 402 on November 22nd, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Opendoor Technologies, Anavex Life Sciences Corporation, Rocket Companies, and Freeport-McMoran, and we discuss 4 new trades on Ondas Holding Inc, Cambium Networks Corporation, Warner Brothers Discovery, and the iShares 20-plus year Treasury Bond ETF. Now, it's always great to hear from listeners. If you have any questions about the trades presented on today's show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, before I dive into today's show, let me first off apologize. I normally try to have this show posted at 9 a.m. or before on Saturday morning, Central Time, of course. But I flew back this morning from New York City and had a pretty busy schedule there and did not have time to record the show last night. And so I am just now recording it, but hopefully I didn't interrupt your weekends too much. So before we get started, I also want to wish those of you in the United States a happy Thanksgiving this upcoming week. Keep in mind, of course, that the market will be closed on Thanksgiving Day. That's Thursday, November 25th. Over the last few weeks, I have been traveling like a madman. I have been to Los Angeles. I have been to New York City, and I had some meetings in Naples last week. So I'm actually looking forward to just sitting still, eating some turkey, and enjoying some time with family. So hopefully you guys understand. I always talk about there being things that are more important than money. Keep that in mind as you're trading, because money is great, but money won't ever love you back. You can have some fun, but it won't love you back. So let's go ahead and get this show kicked off. The stock market finished the week nearly 2% lower. The Dow Jones Industrial Average lost 902 points, closing at 46,245 points on Friday. The S&P 500 index ended the week lower 131 points, ending at 6,602 points. And now it's time for the topic of the week. The topic of the week is wider spreads. Earlier this week, I was looking at putting an option spread in some of the bigger names, some of the bigger companies like Google. Now, if a stock is more than $100 per share, typically the option strikes are going to be $5 apart. As I start using $5 spreads or even $10 wide spreads, my risk changes. Now, on a percentage basis, I stick with the same parameters, but those percentages are on a wider or larger amount of money. So when I say the risk increases, I mean the actual amount of dollars changes. The amount of money I could lose on any given trade multiplies. Now, sometimes I trade 50-cent wide spreads. Other times, I might trade a spread that's $10 or more. Let's say, and when I say $10 or more, I mean the difference between the two strikes is more than $10. Now, let's say I pay between 60 and 65% of the spread value for an in-the-money debit spread. That's the difference between having $33 at risk on a 50-cent wide spread and $650 at risk on a $10 wide spread. Now, even though the percentages are the same, there's more money on the table to be made and lost. I often prefer the smaller spreads simply because I can take the same strategy and deploy it across multiple companies rather than putting a larger amount of capital on one trade for one company. So as you are becoming more confident in your trading, at some point, you will have to make the decision between higher volume or larger dollar value spread values. Now, either way, growth is good, and these are great problems to have, right? Just make sure you always do the math and always understand the total dollar amount of risk at play. So that's it for the topic of the week. Let's go ahead and get into the review of last week's trades. We're going to start off with the covered call on Opendoor Technologies, symbol O as in Oscar, P as in Papa, E as in Echo, N as in November. At the time, the stock was trading for $8.11 per share. I looked at buying the stock and selling the December 9 call at $1.01, hoping for a return of 23.43% in 5 weeks. Well, shares of Opendoor fell $1.37, ending the week at $6.74 per share. The call option we sold lost 66 cents, leaving us with a net loss of 71 cents if we were to close the trade out immediately. Now, I'm not a fan of locking in a loss when there's still 4 weeks left in a trade. I also am not interested in quickly just rolling the strike lower. We are 36 cents below the break-even point. I'll give this stock 2 or 3 days to move higher. And if it heads above the break-even point, then I'll be happy. If not, I will start to look to roll the strike lower to collect more premium. Hopefully it'll be enough premium to offset any loss on the trade so far. Now we could do that right now, but it would also completely nullify the entire trade we initially chose. So I want to be patient another few days just to see how this trade looks before making a decision to adjust it by rolling the strike lower. Next up, we have our cash secured put on Anavex Life Sciences Corporation, symbol A as in Alpha, V as in Victor, X as in X-ray, L as in Lima. At the time, the stock was trading for $3.64 per share. I looked at selling the December 3 put at 55 cents, hoping for a return of 18.33% in 5 weeks. Well, shares of Anavex Life Sciences fell 39 cents, closing at $3.35 per share on Friday. The out-of-the-money put that we sold is still out of the money. Now, our initial goal is for the option to expire out of the money in 4 weeks. So far, so good. No adjustments are needed at this point. We will keep abreast of this stock price through expiration, or unless there's a reasonable reason to close the trade early or to make an adjustment prior to expiration. So far, so good on that one. Then we looked at a credit spread on Rocket Companies, symbol R as in Romeo, K as in Kilo, T as in Tango. At the time, the stock was trading for $17.05 per share. I looked at selling the December 17-16 put spread at 40 cents. That could give us a maximum possible loss of 60 cents per spread. Well, shares of Rocket Companies gained 38 cents, ending the week at $17.43 per share. The out-of-the-money put spread that we sold is still out of the money. And to be clear, we want this spread to remain out of the money, or at least have the stock close above the break-even point at expiration. This trade is also working out as planned, so no adjustments are needed here either. But it's always good to have a list of strategies that you will deploy if you need to adjust these trades. So if you stay ready, you don't have to get ready. Our final trade from last week is going to be a debit spread on Freeport-McMoran, symbol F as in Foxtrot, C as in Charlie, X as in X-ray. At the time, the stock was trading for $40.17 per share. I looked at buying the December 39.40 call spread for 65 cents. That could give us a maximum gain of 35 cents, or that's a 53.85% return on capital in 5 weeks. Now, shares of Freeport-McMoran lost 29 cents, ending the week at $39.88 per share. The in-the-money call spread we bought is more at the money now. The stock price is within our the two strikes of the spread. So the stock price is still above the break-even price, which means we don't need to make an adjustment on this one just yet. And the intrinsic value of the spread is still more than we paid on the spread, but less than where we started. All of that's to say that the spread is still working out, but we need to keep track of stock over the next 4 weeks and have a plan of what adjustments we'll make if this stock price continues to move lower and even moves below the break-even price in the coming weeks. So keep an eye on that one as well. So that's it for the review of last week's trades. We're going to go ahead and get our new trades kicked off. Of course, Friday, November 21st, yesterday, was the option expiration for monthly options in November. The prices are always a little funky on expiration day for the monthly options to come. So on Monday, many of the 50-cent strikes will be priced. So I'm really not a big fan of the trades on the show today as they were priced at the close of business on Friday. I'll rethink the entire week on Monday. So consider these trades and truly all other trades on the show for that matter, educational first and foremost. There might be better trades when the market opens on Monday morning. So with that disclaimer, let's dive into our covered call. I'm looking at Ondas Holding Inc., symbol O as in Oscar, N as in November, D as in Delta, S as in Sierra. The stock ended the week at $6.73 per share. I'm looking at buying that stock and selling the December 7.5 call at 70 cents. That could give us a return of 21.84% in 4 weeks. Now you enter this trade by buying stock for $6.73 per share and selling the December 7.5 call at 70 cents. This trade makes the most money if stock prices finish above $7.50 per share. The break-even price on this trade is $6.03 per share. In real terms, the stock purchase will require $673 and you'll collect $70 for selling the option. Next up, we have the cash secured put. I'm looking at Cambium Networks Corporation, symbol C as in Charlie, M as in Mike, B as in Bravo, M as in Mike. The stock ended the week at $2.33 per share. I'm looking at selling the December 2 put at 25 cents. That could give us a 12.5% return in 4 weeks. Now you enter this trade by selling the December 2 put at 25 cents. This trade makes the most money if stock prices finish above $2 per share. The break-even price on this trade is $1.75 per share. In real terms, you'll collect $25 for selling the put option and you will have $200 locked up in case you need to purchase the stock. Next up, we have a credit spread on Warner Brothers Discovery, symbol W as in whiskey, B as in Bravo, D as in Delta. The stock ended the week at $23.19 per share. I'm looking at selling the December 23-22 put spread at 32 cents. That could give us a maximum possible loss of 68 cents per spread. Now you enter this trade by selling the December 23 put at $1.27 and concurrently buying the December 22 put for 95 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $23 per share. The break-even price on this trade is $22.68 per share. In real terms, you'll receive $32 per spread that you sell and have $68 at risk. And our final trade on this week's show is going to be a debit spread. I'm looking at the iShares 20-plus year Treasury Bond ETF, symbol T as in Tango, L as in Lima, T as in Tango. The stock ended the week at $89.50 per share. I'm looking at buying the December 88.89 call spread for 65 cents. That could give us a maximum gain of 35 cents, or that's a 53.85% return in 4 weeks. Now you enter this trade by buying the December 88 call for $1.91 and concurrently selling the December 89 call at $1.26. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $89 per share. The break-even price is $88.65 per share. In real terms, you'll pay $65 to enter the spread, and your maximum gain is $35 per spread. So that's it for this week's show. I hope you guys have an amazing week, an amazing weekend. Like I said earlier, happy Thanksgiving to those of you in the U.S. We're going to be celebrating the holiday on Thursday. Remember, the market is closed on Thursday as well here in the U.S. And that's it. So have a wonderful weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.